Hi, Warriors. Let's stay in tune in June. Elections in Europe, the extreme right having a good weekend. What historical period does that remind me of? Can anyone think back? Remember when you were a little kid in the 20s and 30s? Anyone out there besides me?
You're on that one, Dale.
Anyone?
You're going to get a lot of hands for that one.
I was shining shoes as a little guy outside the NYSE, giving stock tips to everyone. All right. Anyway, hello, Angelo. Welcome, Mike, Ingmar, Bran. I'm a Titan now. Geez, maybe my waistline. Glenn, how are you? K-Man, Saloom, Laura, Ryan, James, Paul, Simon. Stop it, Dale. Oh, okay. All right, Patrick, Richard. Okay, Glenn. All right. Okay, let's go. So I'll start off with Ryan. Um, so with these political developments and what the ECB did, are you? Can you still be constructive the euro dollar?
Not on that price action. I don't think we can be constructive on the euro dollar this week until we know what's coming. But it's not. This could be a bit of a pullback. Whether it's anything more remains to be seen. 107, 107.20, 107 is a pretty big level. It's all pretty much the big figures, 106s, then 105s. So yeah, we couldn't break 109 last week. And as we said last week, you come off an ECB where we know what's expected. You run into the next big bit of US data, it's good, and you see it go the other way. If we get a weak CPI on Wednesday, a few hours for the FOMC, you'd probably be trading back at 108, 108 plus again. So you just got to roll with the punches, mate. That's all you can do.
Okay. It was actually, I think last week, I've been talking about 105.50. We almost got up to 40.
Yeah.
So we'll see. This was the zone 720, 740, where I was planning on buying the euro, but I was also looking for like 2620 in cable, and the way euro pound is acting, it makes it hard for me, even though it's at my price, to act on it. Do you guys get that?
Yeah.
I mean, you
Exactly
have
the
a
same.
price, but what are the circumstances surrounding it getting to that level? I mean,
Exactly.
if we were at this level and say the euro was only down 20 and cable was down 40, I'd be buying it. Okay, but with EG breaking down, and this is something I talked about a few weeks ago. Actually, got short at this 86 level, and then covered because I thought it was a stop hunt. It's a breakdown. So
But
I
it's
don't.
not a fundamental breakdown. That's the difference. If it was a breakdown because European data was crap and UK data was good and there was going to be a big divergence between the BO and ECB, then I'll be out my longs and probably flip short. But because this is a bit of a shock event, not fundamentals, I'm not touching it. So I'm out all my longs, but I haven't done the reverse short.
Okay, because even if you just took the range 87.5 to 85, that's 2.5 from here. Would take it to 82. So uh, yeah, it doesn't look great to me. I can't buy this one either. Plus, Aussie didn't follow through, and Aussie's not at the price level I was looking for. So both Euro's the only currency that got to the price level I want to buy it, and the other two didn't line up. I mean, I still think we could go, you know, 520 or so in Aussie, just like I think cable could go to 2620 or so. So I have to see
But
how. Go
Dale,
ahead.
Dale,
Go
I
ahead.
was going to mention, and good morning, by the way, happy
Morning.
Monday.
Yeah,
Even though the Aussie or the cable hasn't gotten to your levels that you want to be a buyer, you have to imagine you're not the only person thinking that. So what that also suggests is that the pullbacks have been very shallow. And let's just say
it's strong.
on yeah, well, let's just say on Wednesday, CPI data comes in and it comes in, weaker than expected, just ahead of the FOMC. Then you end up getting a dovish FOMC. The euro's back at 109, but that could put the sterling like literally at 130, or the Aussie at in a breakout territory where it's not, the pullbacks are so shallow that maybe those are the ones that lead the charge higher, or maybe the
Yeah,
weakness,
could
in the
be.
dollar. Could be.
Could be. Yeah, because last week Aussie was, kind of led the decline. So today it's not. Anyway, I think before Wednesday, I have at least another 24 hours to watch the action before I, am forced to do it. Now that I look at it, we got down to this 7:30, close enough for government work. So that's a good point. That cable doesn't have to go to 26, and Aussie doesn't have to go to 65.20. Um, anyway, we'll see. Uh, TLT, everything took a hit off that. So this is probably the key to the dollar too. Yields. I'm not sure if this is a bottom or just a sharp bear market rally to correct this decline. Right now, I lean towards this as a rally to correct this decline, unless we start closing, maybe back over 450 or so. So we'll see. A lot of that's going to come down to the CPI, right, on Wednesday. So there are probably a few days before a big number to let the markets trade and give you a little bit more information. Kay, how are you? Good morning. How are you?
Good morning, Dale. Good morning, everybody.
That's a good point about Simon's making. Bear market rallies, they're not gentle. Okay, so what is in this business? So why don't you talk to us about, we also have BOJ this week, correct?
Yeah, we have the BOJ this week. It's expected that they may start to scale back on their bond buying program, so their form of QT coming. Um, it's sort of expected that they are going to scale back about 1 trillion yen a month. So they are going to be below the redemption levels that we should see. So it could be that the yen sees a bit of strength ahead of the Bank of Japan, a bit of speculation about what else they may do, which should be not a lot, because we heard from Ueda and his mates that they are not really in such a hurry to hike rates as such. But the JGB yields are back above 1%, so that's all right as well from that side. Yeah, I think it's all going to be about what's happening for the US data and the FOMC first. If we get like out of expectations a number on the CPI, that's probably going to be a bigger driver for a couple of sessions, and then we'll see what the Bank of Japan is doing. It's The market is not overly excited by the prospect of them reducing their bond buying, because we already saw that we had one auction in Japan which went extremely well. So that means that the Japanese investors are willing to go to market. So that perhaps could compensate for the reduced bond buying. It's really an open play for what's going to happen post Bank of Japan. But if the rest of the world, let's say, if especially perhaps the US or so, if those numbers remain sticky and the FOMC a bit hawkish, we may find the kind of similar situation than we saw after prior Bank of Japan. So you go a bit stronger into the meeting, then half an hour of digesting, and then we take the other way around again. I mean, it's really I'm open to anything that may happen to the end.
Okay. I noticed earlier WTI filled the gap it left from OPEC here.
Yeah.
So we'll see. I mean, I think it's actually surprising we got back to this, filled this gap so soon.
Mm.
We'll see. You know, Middle East, I don't know what's behind it, this rally, but pay attention to it if we, start getting about 77. It's been kind of a tough trade. It's hard to get short WTI with, the Middle East happening the way it is, but it's an I don't know for me. In fact, I have a lot of I don't knows. I don't think that we made the lows in gold and silver Friday, even though they're bouncing.
Yeah, I
So,
mean, you could
go
end
ahead.
up having a false break there on gold.
What's that?
You could end up having a false break there on gold if you don't go confirm below 2280s. It may end up being a fakie there under 23. Huh?
Yeah, I don't think so. I think, a lot of downside. I'm not saying we can't rally further, but the 2250 level, which is I've bandied about for a while, looks pretty viable. Especially if the dollar still has a little left, but you're right. It could end it. This could just be an ABC. I still think we have this in it though, so I'll be patient. I think part of it is that maybe there's a little more upside in the yen, but I'm not buying gold. And also, some of the gold shares, like, go to like a popular one, GDX. It hasn't opened. It's going to come in about 30 cents better, but that's not enough of a dip for me to want to buy the gold shares either. Why don't we talk about, since we're talking shares, why don't I get everyone's view on risk? Talk about the S&Ps.
Well, Nvidia that split, so now everybody can afford it. So
yeah, that could change.
Nvidia should double from here.
Yeah. Okay, that's going to be interesting. Sometimes it turns out to be bearish, but what do you think about S&Ps here and the technical setup that we have here, Blake?
I have other than well, you can really see that 50, is that a 50 DMA? It's got to be your 50 DMA.
Yeah.
That 50 DMA there is also coincides with that previous 38% retracement. As I said on the week ahead video, while you're above that, it's really hard to be short. But at the same time, you get all this divergence, but that nothing stopped this market. And I think you got to watch some of these European equities. They're trying to fill the gap. DAX just held support. So, if the European equity markets can hold up, give me a reason why I should be selling US equities here. They still look bullish until proven otherwise. Until we start seeing a solid, lower daily low, I'm not
like
getting sucked into shorting risk.
Right. I'd like under 5,200.
Yeah, I think that's the level. So
okay.
Yeah, you may get it if we get a very sticky CPI on Wednesday perhaps. But
yeah,
I think today what's happening today is a bit of money flowing
Europe.
Out of Europe back into the US. We've seen also the bond markets in Europe getting a bit of a knock on the head, and that's post those European elections. That may go on for a couple of sessions, I think, and then we'll see where we end up, and then it's back to dollar watching before we get a bit more certainty about what's happening on the European political front.
Okay. Well, I think I brought it up late last week. I'm looking for, a third drive, and the Dow shows up. So here's the three things, and I'm not sure where the S&P will be, but the three things I'm looking to short. That looks pretty textbook at new highs to probe a 3 drive. Same with, I want to have some negative bank exposure if there are problems. Same kind of formation there. and also the weak sister has been the weak sister, Amazon. So those are three potential shorting candidates. So, until the Dow gets up there,
The concentration is in just a few stocks, and that's a fact. And when that changes, that's gonna shake up the rest of the market.
this has been a bad sign. This.
And don't forget, there's the
Yeah.
Apple conference this week too.
Yeah,
And
they'll goose it.
what's that?
They'll goose it.
Well, I mean, let's just say they talk about Siri and AI Siri.
Yeah.
If that's all they got, it's like, okay, well, we all know that. So yeah, they may goose it and sell into it. But Dale, do you mind if I take over from here?
No, go ahead. The Russell really looks lousy compared to the rest of the
Yes.
market. And guys like Tom Lee and Dave Hunter, a lot of these guys are talking about the Russell doubling, and it hasn't kept pace with the Qs or even the Dow.
They got sucked into that last year too. Last year they said that the Russell was going to break out, and it ended up being the failure. I still think it's going to be the weak link and everything. And hey, I just want to say good morning, obviously, to everybody. And Dale, thank you for your updates. This is, if you're looking at ForexAnalytix and you're a user of ForexAnalytix, we're going to have a survey that goes out. I just wanted to show you this because it's in beta. I've got it right now. You can click remind me tomorrow. If it pops up, it will pop up for those of you that are ForexAnalytix subscribers. I really urge you all to do it. And because we're trying to just get some information from you guys. What are the most used tools in the toolbox that you have here on ForexAnalytix, and just trying to get some feedback from you. So please do that, because you also will be entered to win for doing the survey. Anybody that does the survey will be entered to win a $25,000 trader funding program account. And that leads me to say that in about 10 minutes, we're going to do the drawing. Steve is coming here to do the drawing for the free $100,000 trader funding program account for people that signed up for our semi-annual or annual subscriptions, our special that we had last month. So just want to make sure everybody's here listening in for that. And we will be discussing that in just a few minutes. I want to talk about just a few things regarding currencies. So, the euro, Dale, as you were saying, it's coming down to your level that you were looking at. I mean, we are really near the 618 retracement, 161% extension, a lot of confluence down here in the euro. But this is what you were talking about sterling. I mean, we're just very shallow dips. A lot of that has to do with the euro sterling breakdown. Aussie also, 38% retracement. Again, very shallow dip right now. And we do have some Aussie data coming out this week, because it's not just the Fed and CPI. We also have employment in Australia. So some key data points coming out of there. But I'm going to go, first of all, I'm going to go back to Cayman and ask, what is up with your home country and what happened to your government in Belgium?
Oh, we have a habit of changing governments and then spending the next 6 months in trying to find a new one. I mean, Italians think that they have the monopoly on changing governments, but we are not too bad in Belgium either, but he was already a non-real majority prime minister, so it's going to be a bit of a mess over there for a few months again.
Got it. I think that between that and obviously France, those are just it's like that's what's really shaking the euro here. Did you give your thoughts on the euro? I know Ryan did, but did you give your thoughts on the euro and how it's trading down here?
No, well, I think it's going to, well, that's what I said a bit earlier today. And I think it's coming back a little but a bit now. But to me, it's going to take a couple of sessions, perhaps for some asset managers also to rebalance, because they don't like uncertainty. So I think we may have a look at those low 107s, perhaps high 106s in the process. But I don't think that the dollar as such should really ramp higher either. There's been some discrepancies or some mixed signals in Friday's NFP, and there's a lot to happen over the CPI and the FOMC. So I'm not an outright bull on the dollar really. I do still feel a bit fragile on the euro, but as I said, it's already coming back. But yeah, perhaps the euro crosses have smalls more to come off as well, but perhaps euro sterling, euro Swiss, euro yen to a certain extent. Those could remain a bit on the fragile, but yeah, the dollar, I'm relatively neutral right now. I'm not buying dollars versus stuff like cable, Aussie, Kiwi, or also just because of that Friday report, which I think, okay, the headline number was very strong, but then a lot wasn't as strong as it really seemed on the surface, the employment rate, the participation, and everything.
Yeah, that unemployment was definitely a lot nastier. All right, well, thanks for your thoughts, Kay. Tim says, do you all provide training on those funded accounts? Yeah, that's one of the benefits of, that's actually the main benefit of being part of ForexAnalytix, or excuse me, the trader funding program, is because if you're in the trader funding program, you get to access all of our tools with ForexAnalytix, all of our the live events that we do throughout the course of the day. There are a lot of private events, plus you got chat rooms. So Tim, yeah, that's the whole benefit of being with trader funding program. We have the infrastructure to train you, and you have access to myself and Ryan and K-Man and other team members. Greg is here, and then you can read all the analysis and know what our patterns in play are and everything else. So yeah, that's the whole gist of it. All right. Ryan, let me go back to you really quick. And you were talking about euro sterling. I think it's now a sell on rally type of event, because that was such critical support. Does this breakdown in the euro sterling make you more of a sterling bull at this point?
No, not at all. I'm still pretty neutral, because as I said to Dale, this breakdown, it's not a fundamental breakdown. It's not because of economic data or anything like that. It's an event driven breakdown. So the fundamentals haven't changed between Friday night and today. But it was looking weak, for the last couple of weeks. So it wasn't bouncing off that 85 level, which spells trouble in at the best of times. How it reacts to a move back to 85 is another question. We got UK jobs data tomorrow, and wages is going to be the key component of that, because the minimum wage kicked in April, so that should be reflected in this wage numbers. And if that's strong, that's going to change thoughts for next week's BME. So that could give us a kick lower. But yeah, how it survives a test or retest to that 85, 84, 80 level is going to be important.
Okay. All right. Very good. What else did you guys discuss on the flow show this morning in Europe that you think that all of us North American traders need to be aware of?
Well, I'm not going to go over the ins and outs of European Parliament politics again.
Oh, please do. That's just kidding.
No, you can watch the replay for that one. But it is an important distinction to know what it all means, because all these right-wing parties gaining seats in European Parliament, there's still a very, very small minority in there. So MEPs aren't really, law-moving members of Parliament. It's all a lot for show. But what happens domestically is going to be more important, particularly in France, when we get this election June 30th.
All right. Very, very good. And well, I'm going to bring in Steve in just about a minute, but I want to ask any trade setups that you're looking at for today. Ryan, I'm sorry.
Sorry, mate. I'm looking at $MX, keeping an eye on that one. I took a bit off. We hit that big, massive 1850 level. It's off quite a chunk since then. That was the obviously big, huge level. There's three levels we're playing at the moment: 1850, 18, and 1740. And we hit that 1850 pretty much on the nose, and now we're trading 1833s.
Yeah, it's a big one. It's a big 24% retracement. I mean, it's your first major Fibonacci retracement of this entire move. So it makes sense that we're going to get a reaction from here, but we could even get a little bit of move above it. You know, this is an area. Whenever you're looking at support and resistance, it's not an exact science. It's a zone. So we can play on both sides of this area for quite some time. But yeah, we are getting a pretty big
38. It's also the 38.2 if you take just the second leg. So if you go a bit wider. So that move, 2022, I think it is.
Actually, that's a 15% or 50% retracement. So you're probably talking about one of these other moves here. Oh, this one right here. There you go.
Yeah, let me have a look. Yeah.
Yep, it's your 38% retracement of that secondary leg. Yeah, that's we call that a confluence. So a big confluence of resistance right there. Look, I'm looking to buy a $MEX on any dip. You know, I know I went through this on the week ahead video, but yeah, if we can get a move back down below 17 or below 18, back to 1780, 1750s, that's going to be the place. But that would be a pretty big drop from current levels. Really would be.
Yeah, or you go with a break of 1850 and either go with it or wait for a confirmation hold.
Yeah. All right. Well, hey, let's bring in Steve, which we don't often hear from Steve. But Steve, good morning. How are you? Or good afternoon in Athens.
Good morning.
So Steve is putting together the subscriber, or he got the subscriber list of everybody who joined ForexAnalytix through our special. We had the special where we had a sale price of the semi-annual and annual subscriptions that we only do a few times a year. Steve, I know you're going to run the lottery spinner, and go ahead and why don't you run it, and we'll give you a drum beat.
Okay, let's
countdown.
Let's get somebody randomly picking a number from 1 to 52. Who wants to do it? Dale, you want to do it?
Dale,
Do what?
Random number.
Give me a random number from 1 to 52. Names are not in alphabetical order or whatever. They're shuffled.
Okay, 49.
49 is Hugh H, the last name, and his email starts with Hugh as well. I'm not going to give more information, but you know, if Hugh is here and wants to answer, otherwise we're going to email him.
Congratulations, Hugh. And I don't know anybody in our community that is vocal. Yeah, just because you know they're in our community doesn't mean that they're chatting in the chat box or in the chat rooms. But I don't know of a Hugh. Do you, Ryan K-Man? Do you know of a Hugh that you've seen around?
No?
Hugh Grant.
No, it's not. Last name starts with H.
Hugh H. Well, congratulations, Hugh. That means that we want to see you in the ForexAnalytix community once you start your trader funding program account. So congratulations.
I'm putting the information for you.
They want Saloom wants us to pick another one because he's not here.
Yeah. Maybe on the next giveaway, Saloom.
Yeah, congratulations, Hugh.
Yes.
Yeah, you won more than you thought you were going to win, because now you're going to be part of something pretty good. Yeah. All right. So congratulations. Happy birthday. Merry Christmas to Hugh from everyone. All right. Thanks, Steve. I tell you, what a lottery system. And Hugh, I hope you still have my bank wire information.
Oh, absolutely.
All right. So I have a new guy to interview today.
Hey, what's up, Tony? Good to see you,
Yeah,
man.
I knew you
Good
knew him,
morning,
Blake.
guys.
So, we had a cancel, and Tony stepped up to pinch hit, and I've met Tony before. Tony, welcome to Face.
Thank
Nice,
you.
nice.
Great to be
Yeah,
here.
yeah, nice to have you here. So, what I usually do with first guests is uh, have them go back in time and talk a little bit about their journey. So, let's say you're in high school or college, and what were you thinking back then? Did you think you'd be involved in the financial markets? What were you planning to do?
I didn't actually. It's interesting you asked that. I just wanted to live all around the world. That's really what drove me in my late teens and early 20s. And straight out of undergrad, I got a job with a freight forwarder, which is one of the least glamorous careers you can get. But it got me in international markets and international trade immediately. And I was talking with people in other markets, looking at trade, processing shipments, walking warehouses, all that stuff. Again, very unglamorous. But it really got me into the nuts and bolts of trade and currencies and markets very, very quickly, understanding the impact of a Forex market change on,
Yeah.
say, trade with Taiwan or Japan or something, was very material to me. It wasn't theoretical at all. I ended up living in Europe for a few years. I lived in Asia for 15 years. I led global research for the Economist Intelligence Unit. I led Asia consulting for a firm called IHS, which is now part of S&P. And then 10 years ago, we started Complete Intelligence, which is an AI-driven platform for forecasting global markets and economics. And 6 months ago, I started a platform called Cloak and Dagger, which focuses on geopolitics, did that with Albert Marco, and we continue to do that today. And we just have a new piece up on Europe this morning.
Okay, so yeah, it's a great story, and interesting how travel was the driving force to lead you into, seeing that people had to shift currencies on a lot of transactions, and you probably saw the big spreads that banks were charging your company,
Huge.
and yeah, and knew that there was probably a better way. So great to have you. I mean, it is the topic of the day. So let me ask you this: with what happened in Europe and the extreme right um, gaining more seats than people thought they were going to, it was a surprise. Although historically, Tony, does this remind you of another time and era where the right started gaining power, like the 1920s and 30s?
Yeah, you know what? I don't know. I hear a lot of those analogies, but when I see the results of the election, when I saw them last night and I see them this morning, the results, they're only EU Parliament results. They're not national level results, first of all.
Okay. All right.
Second, whenever there's a move to the right in Europe, I think the go-to for many people is, oh no, here we go. There's going to be brown shirts in the street, and
Yeah.
the same old story is going to happen again. I think it's different. It's hard. You have the institutions in Europe that make that pretty hard. And if you look, for example, at Macron's immediate kind of jump into elections, into new parliamentary elections in France.
Yeah.
I don't think Macron is the least bit worried about Le Pen taking over the legislature in France. I think he knows that, right wing wins EU Parliament, media jumps in and says brown shirts are going to be in the street tomorrow. Europeans don't really want that. And so when they vote in France, there's more of ultimately a more centrist vote because people dial back their expectations. So I think it's possible that we see that, but I'm not quite sure that that's really where we're going. I guess the other dimension of that is kind of, oh no, we're going to be the next Hungary, right? With Viktor Orban and all this other
Right.
stuff. It's possible, but von der Leyen is not going anywhere. The ECB's policy is not going anywhere. So we've seen this this decline in the euro by 50 basis points or something this morning. And, you know, I think that's kind of a short-term issue. Because when people really kind of wake up and look around and see, you know, that the mechanisms of the infrastructure and of the bureaucracy are still in place, and these guys will have really limited ability to change major policies in Europe. Are they going to change the inflationary policies in Europe? Probably not. Are they going to change immigration? Maybe at the edges. And are they going to change the war in Ukraine? Probably not. So those are kind of the three top voting issues among those voters over the weekend. And they'll have, I think, a negligible impact on the overall policy for the EU.
Okay, let me ask you about Ukraine. So do most of these newly elected from the right support Ukraine? Because Ukraine used to have, you know, they fought with Germany. So
Yeah,
I'm wondering, I mean, they wore German uniforms. They were part of the force against Russia, right? So,
right.
kind of a historical enemy. So are these politicians going to stiffen the back of Europe to step up to do whatever has to be done so that Putin doesn't win? Would you say that's a positive for Ukraine this election?
I would say neutral to slightly negative. I mean, these guys are very
Isolationists?
nationalistic. Sorry?
Oh, so they'd be more isolationist than wanting to support Ukraine.
Yeah, I think that's the case. I think
Okay.
they're looking at things like energy costs,
All right.
and how they hurt, especially in 2022 on energy costs. They're looking at providing for, their people, their nation. That's first and foremost. So I think the Ukraine calculation for many of them, of course, it's not all of them, but for many of them, I think it's secondary. That's not to say they don't support Ukraine. That's not to say they hope Ukraine falls to Russia. But I think that's a secondary calculation for a lot of these right-leaning or far-right people who were just elected in Europe.
Do you think that this could be a foreshadowing of how national elections go to some extent? Is this like a market tell for future elections?
Well, to some extent, yes. But if we just make the comparison to the US, you see immigration as a big issue in the US. And last week you saw Biden come out with immigration and executive order on immigration. And so, the national leaders in Europe, similar to the way Biden came out with immigration EO, they will make incremental moves toward the center compared to where they've been over the past couple of years. And that's just in response to this election. So if the elections were held today, would it impact national elections? Yeah, it probably would. But since the national elections are going to be held in some time, the politicians will at least kind of signal some moderation, some movement toward the center. And then, it'll have I believe, a relatively small impact on national politics rather than EU politics.
Do you have an overall dollar view, Tony? Last week after the NFP, the dollar roared and has taken out all the shorts above these highs here.
Right.
Do you think that first of all, do you have a view? Are you bullish a dollar? You're bearish a dollar? Where do you come down?
Yeah, let me share, if you don't mind, I'll share some forecasts with you. Okay, how about that?
Go ahead.
Okay, so now we really look at we look at monthly interval forecasts. Okay, we're not looking at intraday or daily. We keep that stuff behind the curtain, but for our subscribers, it's really a monthly interval forecast. and a big part of what we do is we show our forecast accuracy and error rates, so that our subscribers understand how we've performed. So we're not doing some black box voodoo where you have to guess, and calculate on your own how we perform. So we do see the dollar weakening slightly over the next few months, and there are a number of reasons for that. But when we look at, I just want to show you kind of our accuracy, our 1 month and 3 month forward error. Our accuracy on dollar forecasts is pretty high. Okay. So we have a high base low. If you look at the bottom of this forecast, we have a high base low for those forecasts as well. But this really is on Fed policy. It's on relative strength of the dollar compared to, say the euro and other things. So we're not necessarily looking at the euro weakening dramatically as we've seen in trading this morning. Okay. So when we move over to, do you have any questions on the dollar on why and what our outlook is?
No, just go ahead. I'm just following what you're saying. So,
Sure.
if I have a question, I'm not bashful.
Great. Okay.
All right.
For the euro, again, we've seen the euro fall pretty dramatically, and that y-axis there is only goes to the hundreds. If you look at the bottom, this shows much more detailed forecast here. But we do see the euro appreciating a bit over the coming months. And so that's kind of the other side of our dollar forecast. Now, the dollar weakness is really, that's the DX. So that's really in relation to the euro. And the euro's got a trade surplus. There are other things that are really helping the euro. There's presumption that ECB will continue to be very, very dovish. Will that continue? We're not so sure about that. Now, when we look at Asian currencies,
how about the yen, US dollar yen?
Right. So when we look at the yen, we see the yen continuing to weaken versus the dollar. Okay. And we've had this view for some time. So we think the yen will hit its weakest point in kind of Jan-Feb of 25. So it's going to continue to grind weaker. It's going to be managed weaker over the next 6 to 9 months versus the dollar. And that's a Japan domestic issue. You just saw, Q1 GDP was revised down, was negative. It wasn't as weak as people thought, but it's still contracting. Consumer sentiment and spend is down. Things don't look great in Japan. Meanwhile, you've got the Ministry of Finance and BOJ trying to talk the yen up, but nobody's really convinced. Now, this is on a relative basis. This is good for trade, and it pushes the CNY weaker as well, because those Chinese exporters have to compete with Japan and Korea because China isn't as cheap as it once was. So when we look at CNY, we do see CNY gradually getting weaker as well over the next several months. And so, again, that's a managed weakness, but it's managed partly because we see CNY declining, or sorry, JPY declining. And so, these are all, the dollar is becoming relatively stronger compared to Asia, but relatively weaker compared to Europe. Sorry, let me show you some of the accuracy on those as well. So,
do you have any expectations out of the BOJ this week, Tony?
Well, do we ever really have expectations on the BOJ? I mean, it's kind of status quo as it always is. It's a lot of talking. Ueda is not an aggressive BOJ chair. He doesn't have the heft that Abe had, and he's a little bit afraid to change things too much. So I think, in terms of, say, weakening Asian currencies, he's probably the right guy there, because he's not really standing in the way of a weakening JPY compared to US dollar. And given where Japan is economically with falling GDP and consumer sentiment, they really do need a weaker yen to help stimulate things.
Okay. If we can move on to risk, okay, and if you're, and I believe you do cover, how can you not cover things like S&Ps and Qs and NVIDIA?
Sure.
NVIDIA splitting, any dynamic with NVIDIA splitting that gives you an insight for risk on continuing, or are you starting to tell your subscribers to be cautious about risk? Where do you stand?
Well, I think what we're seeing there, so let me pull up the S&P. So, we're really seeing, at least until the election, fairly sideways trade in the S&P. There's not a lot aside from the top 3-4 stock movers, regardless of what Apple says today about their AI or whatever, we're not seeing a huge impetus for massive growth in the S&P. After the election, we see things, at least at this point, with 7-8 months of visibility, we really think that we'll see more of a growth driver post-election. But at this point, we're not really seeing it. And I think that cuts both ways. If Biden is reelected, that gives Yellen much more latitude to spend even more than she's been spending on the fiscal side. If Trump is elected, he'll push very hard for lower interest rates. And so either way, it seems like we'll see at least some upward movement in markets going into, say, December, Jan of 25.
Okay. So people that are worried about the election should put that aside.
Yeah,
Go ahead.
if you remember when Trump was elected in 2016, we saw markets risk off for about 2 hours after the election.
Limit down.
Right. And then we saw markets rally pretty hard shortly after that, right? So,
Yeah.
Is Trump good for markets? I don't know.
Yeah.
Is Biden good or bad for markets? Well, we've seen over the last 4 years things have done pretty well, but they've had some serious fiscal and monetary tailwinds behind them. So the question really is, how long can we continue to do that? I think it'll last as long as it can.
Okay. View on yields and the Fed coming up this week, big week, and CPI, some red events. Do you normally stand aside on red days, Tony, or hold positions through these numbers?
It really depends. That really depends on the market, the segment, the sector, the stock. So, and it really depends on individual thesis. So I don't, sometimes yes, sometimes no. So I know that's a really ambiguous response. But we're looking at what the overall trend is on the say more medium-term horizon as to whether or not we kind of hold, and it all depends on kind of where those stops are as well.
Well, you need a lot of whiteout if you keep a dot plot chart.
Oh yeah.
Right? I mean,
Right.
the movements and re-rating of markets over the past 3 months has been amazing, from looking for 6 to maybe a hike to then at least 2 to maybe 1. The market's confused, Tony. Do you think Powell is confused too?
I don't think Powell is confused. I think we have a battle of the regional Fed heads trying to advocate for their position. And we get somebody like Goolsbee, who is kind of a stand-up comedian, come up, and it's really hard to take him seriously. And then you get some other people come up who are a little more thoughtful about things. And you want to take them seriously, but then you see the votes in the minutes, and there's really not a lot of differing opinion when it comes to the votes. So the chatter in between meetings is, I think, more meant to rein in Powell's comments. Powell tends to either calibrate way too dovish or way too hawkish when he's in front of media. So he'll talk, markets will react a certain way. The regional heads will come out in the weeks that follow to calibrate the message that Powell has said. I think Powell himself has clarity on where he wants things to go, but he's just not great at messaging sometimes. So those guys have to come out to try to calibrate that message to say what he meant to say.
Okay. So some of the stars of the last quarter have been miners. Precious metals have been a tear. We're in a little bit of a pullback phase. Do you think that the move in precious metals has legs? Nothing goes straight up, but do you think that there's more left in the precious metal move in gold? We could see new highs.
Let me pull up gold here. And it looks like it's a really boring chart. It looks like we're expecting gold to continue to move up, but at a much slower pace. And let me check silver here. Okay, so we do see silver. I'll share this one. We do see silver coming down in the coming months, but again, it's not a dramatic fall. But we do see silver coming off a bit in the coming months and then kind of heading sideways. So until we have some clarity on where monetary policy is heading and what's happening in the economy, I think Q2 GDP and the makeup of Q2 GDP is going to tell us a lot about where, say, metals are heading, where the dollar's heading, and so on. So a lot of things, the S&P, gold, Fed, these sorts of things, I think are really in a holding pattern until we get some clarity on where those markets are going.
Okay, the biggest lesson you learned in the trading business, Tony.
Ooh, it's okay to be wrong. Just get out as quickly as you can, right? Okay. I mean, you know, when we do our forecast, the reason we post our error is so that people know this isn't my opinion or this isn't our team's opinion. This is a data-driven opinion, and we owe it to our subscribers to tell them where we've been wrong. And so we want them to understand that this is a data-driven hypothesis, and you know, it's really not. This isn't really a recommendation. This is simply a calculated kind of outlook. So, but there are months when we're wrong, you know, more than say 5% off in certain cases, and there are months when we're in areas where we're really good. And so I think humility is the name of the game, and just understanding when to cut and when to find something else has been a hard lesson to learn at times.
Yeah, and if you hear yourself saying, well, I think I'll watch this a while, it's time to liquidate and shut down your platform.
Sure. Yeah.
Right. I think I'll just watch it. Or how about this, Tony? You ever hear yourself think this? I hope this one works.
Oh, sadly.
Anyway, bro, it was. I really want to thank you for stepping up last minute.
Thank you, Dale.
And I'm gonna, if you're interested, keep you in the cycle and rotation, and
love to
bring you back. And what's the best way for people to follow your work at Complete Intelligence or get a hold of you?
Yeah.
Go ahead.
So on Twitter, I'm at Tony Nash Nerd. We have a weekly.
Why nerd, Tony? Why do you think you're a nerd?
Dale, I've been a nerd my whole life, and I might as well own up to it.
You think girls like that? You think girls like nerds?
That's no. I've been married for 26 years.
All right. Okay.
She's known I'm a nerd from the start. We have a weekly YouTube show called The Week Ahead, and CompleteIntel.com is our website. Thanks, Dale. Thank you.
All right. Thanks, Tony.
Thank you.
You're now my trading warrior brother. You got through an interview with me.
Yep.
So appreciate it. I'll be in touch with you. Check Tony out. Humble guy, doing his best to keep people on the right side of things. And it's data driven, not discretionary. So that's a wrap for us, everyone. Remember, don't just count your data driven trades, count your blessings, and See you tomorrow for Turnaround Tuesday. Join the team in 16 minutes on the Morning Edge. Adios, and thanks once again, Tony Nash.